Hey everyone, I'm Jen. Thank you so much for joining us on another Blockchain Banter Trading Crypto. I'm here with Dr. Mark Richardson, project lead at Banter and Carbon DeFi, along with Keith Allen, co-founder of Material Indicators, TA and algo trader, order book analyst, all of the above. Thank you guys so much for joining me. Crypto Corio will be joining us a little bit late today. So we'll kind of have him finish us off with some of his narratives and things that he's noticing. Keith, if you wouldn't mind starting us off, I would love for you to maybe share your screen, update us what you're seeing in the fire charts. Unless you have something different, completely different plan for us, I will welcome that too.
I'm doing a lot of the same of what you have. I was going to say come to know and love, but well, at least come to know. I don't know whether you love it
And
or not,
love,
but
and
I've
love.
got that. But I got that going for me. So yeah, I actually woke up today and saw some interesting moves in the order book, and that really kind of alerted me to the fact that this we still just have not established, in my opinion, a really well-defined consolidation range. And I think that's what needs to happen before we see that next big move. Everybody anticipated, oh, halving's going to happen and boom, we're off to the races. Not how it works. We shared that more times than I can count, not going back to it now. If you want to know what it's all about, go look at the history. Check any of our previous shows or any of my previous pre-halving videos on my YouTube channel, and you'll see what we're talking about. But this really, we had from what, the early March, right, is when we hit that 59K low, and then through April we had a high of 73.8K, and that was just a monstrous range, right? And we never really established. I like historically we see something in a $5,000 to $6,000 range where price tends to consolidate. Often, not always, but sometimes we see that, and that seems like a reasonable size range for price to operate in until something breaks on either side. And so now, what we have at the monthly close, we dip down to 56. There we go. There's my college student. She has senioritis today, so she's home from school. Headed for college soon. Oh man. So we have a situation now, and let me go ahead and share the screen, and we can look at this on the candle chart, and then find the correlation on the we'll look at it on fire charts and find the correlation on the candle chart, because I think it's important that people realize, don't rely on one single data point, not one single data point, not one single tool, including mine. And so I popped that in there, Jen, if you'll share it.
Got it.
You can see liquidity has just constantly been moving here this past week or so, like from up above and down below. And this is good. It's good to see because it gives us some price action we could trade. But where it's coming from and where it's going to is what's really, really important. So let me zoom out a little bit to the monthly. And the first block that I saw this morning, that one that we just saw at 62 is brand new, by the way. But this morning I noticed this block right here, which seems to have come from down in the 50K range, right? 50 to 51.5-ish. A little was taken from here, a little was taken from here, and it appeared up here. So why is that important? If they really want to get filled, well, they're moving, closer to the action. They may eventually want to get filled. They may be just trying to, they may be anticipating a retest of support, which I believe we should have. Well, let me click these back in here. They may be anticipating a retest support and trying to front run that, but more than likely, I think that they're trying to lure in more support, similarly like to just what happened, and above here to help establish more, more strength, maybe help establish the range and tighten things up before we get a breakout. We've had a lot of resistance here in this 65, 66K level, and we have even more above the 70K level, right? Hundreds of millions up here, right? And so, and it's stacked, and it's been there for a long time, but you can see it has been eroding a bit. And I have the contrast pushed here a little bit that actually helps us see the erosion that's happened here. And And the reason this is eroded is because much of it has come down, right? And you can see when that happens, you can see the impact it has on price. When these blocks start dropping down here, then it pushes price downward. I like to call this liquidity herding, right? If they're not really in the active range and they're dropping blocks, above, like look at this here. This is like way outside the range, but look at the impact it had. It helped push price down. And we see that in both directions. Then we see support come in, and that helps push price up. At some point, there's a breaking point. They go back down, and it replenishes here. They kept going, so they added more, and it eventually broke through. So when you get these strong levels, eventually something is going to break. But until that happens, you have this kind of back and forth of ranging, and that's trading. We talk about no straight lines all the time, right? And so that's what we're seeing here. So our big block of support was happening here at this 55 to 56K level, actually some depth down even to the 50K range. So seeing some of this move up here is a positive sign. Seeing this move into place here, also a positive sign. Seeing some of this come drop down, right? So seeing bids move up is bullish, seeing asks moves down is bearish, but ultimately this is thinning out, right? Because they weren't getting filled up here, so they dropped it down. Okay, so the net effect of that is eventually it gets absorbed. And so once that gets absorbed, and this area that was prior very strong resistance softens, it becomes easier to penetrate. And then we can talk about this range here. Now, adding to that bullish narrative, if you will, we have our good old friends in the ETF business. And, on May 1st, we saw a mass sell-off. That was right after, it was really in between the monthly close and the monthly open, at least in terms of when TradeFi does business, right? And this, to me, is the biggest issue with being an ETF trader or investor versus an actual Bitcoin trader and investor. They're restricted. They're confined to those TradFi hours. We are not. And because of that, we can take advantage of the max swings in either direction, and they cannot. So with that in mind, we had this rally over the weekend, and look, this could have been because they saw more downside coming, or it could have possibly been just a monthly rebalancing, right? No way of knowing for sure unless we kind of see this pattern of behavior at the first of every month. But there's obviously buying has resumed since then. Will be interesting to see if today is a net positive day or a net negative day when it's all said and done. Most significant part of this is that Grayscale put in their first day of positive inflows, and the market really responded to that. And so over the weekend, what we saw transpire was, first of all, on Wednesday, Wednesday's when the dip happened, right? Between Tuesday and Wednesday, in anticipation of the Fed decision, we saw the market dump, and the market dumped because they thought we were going to get a hawkish Fed, and price absolutely broke down. They thought we were going to get a hawkish Fed here on the 30th. And I think I had said that day, remember, we had that was on a Tuesday. And I said, watch out for this fuckery wick that could take us down below 59K. And it actually happened, right? Right at like the last possible minute, we got that wick, which I indicated would be a sign of weakness. And it happened here, and things broke down further. And so at this point, this is where our technically local support is established, but we may have this, with these blocks moving up, that may help us define this range. So I look at these key levels of technical resistance, the moving averages, which have served me very, very well, and the 21 seems to be the most important one for me. It seems to have validity across time frames. I'll start by, right here on the daily, you can see we're fighting above and below this line every day, literally. And so until we can establish that, that's not a sign of strength until it holds. We had a rejection from this 50-day moving average. That's the top, our local top. And now, there's, I actually discovered this looking actually on the 4-hour chart, this falling wedge pattern. Let me clear out some of these indicators and make it easier to see. This falling wedge pattern, which would indicate a potential breakout here, right? Of course, that breakout only happens if we can hold these levels. And again, here's that green 21 moving average. We've lost it on the 4-hour. We've not yet held it where we're holding it for the moment on the daily, but this is where it's really important to me. On the weekly, if we lose this level here, and you can see there's some confluence with where this falling wedge is happening now, and tomorrow this might be in a different place. If we lose this 21 moving average, I really have concern that things break down further. Obviously, our first line of defense is this 50 to 52K range, and we do actually have some confluence there in terms of where
Keith,
liquidity.
I want to ask you a question too.
Yep.
Sorry, go ahead.
Let me just finish that thought. We had confluence on that 50 to 52K range in terms of support, but look, some of that support here, that's exactly what just moved up to 58K. So expecting a retest and wondering if this will hold as a retest, and we could then maybe establish a 58 to 65K range as our consolidation range. I really want to see that consolidation range well defined, and it could happen. We could be there for an extended period of time before something breaks. But I think the macro, especially with the ETF interest, both domestically and internationally, Hong Kong came on board a week or so ago. I read news today that Korea has approved something in the future, and so do your own research on that. I didn't go deep. I just literally saw a headline, so I haven't actually read the article yet. But the fact that we're starting to see more of this, I think that the U.S., a lot of the world is looking to the U.S. to really establish the guidelines on some of these things, and then once we crack the seal, the others come in. So that outlook to me is macro bullish. It's what happens between now and then that you got to be worried about.
Yeah. I didn't mean to cut you off, so I apologize. I was following what you were saying in the beginning, right? And then we went to the indicators. Can you go back to the indicators for a minute for me?
Mm-hmm.
So just so anybody who doesn't, I do have a question here, and maybe you can clarify for me as well. But with material indicators, you see that it's a trading view chart. You're using the trading view charts, and these are the indicators. It's not like you put these little arrows in and these indicators in for us to view. This is something that the product does, right? It provides these indicators.
This is our trend precognition indicator, and there's actually a few different algos. I'm using two of them on my chart here. The arrows on chart are the A2 plus algo, and the one below chart here is the A1 algo, and they're different. And I'll tell you what they do differently for me, without getting too technical or spilling the secret sauce. The reason I like to use them both is because, obviously there's a little bit different perspective from them. And so if there's ever an instance where they are conflicting with each other, and that does happen on occasion, that gives me reason to pause and analyze deeper. All these indicators on TradingView have some candle lag to them. Takes a full candle to validate. So in other words, this is a weekly signal here, and it is tentative until the adjacent candle closes. Obviously it looks like it's valid in the fact that, and it's not saying that we're going to the moon from here. What it's saying is we're not going to see a low lower than this low this week. And that obviously seems to be playing out right now. Now, why this is important, and this orange line here is the A1 slope line. This moves in real time. So while this won't validate or confirm until the end of the week, same with this one. When we have confluence between the two algos is typically a very positive thing. Doesn't happen all the time. Look at this. We had confluence on the red signals here. Next one was a green arrow. Here we had confluence. Here we had confluence. Here we did not have confluence. And so that when we have confluence between the two algos, that gives me some added confidence. But this line right here is the A1 slope line, and it moves in real time. And what it's telling me is the direction of the momentum and really kind of the strength of the momentum based on the trajectory. And this looks pretty freaking strong, right? There's times that where it will go flat. If I took this down to a short time frame, you would actually see it. You would, you'll be able to see it move. And so I like this as kind of a real-time indicator to help me with my real-time trading decisions, right? Am I going to push the button now, or am I going to wait? So, then you kind of cross-reference the data across different time frames. So in the case of, we're looking at a weekly signal here so we're up on the weekly, right? On the monthly, we have a down trend happening here. Same thing. This needs to validate, and it won't validate until this candle closes. But sometimes we can act on these early when they come on strong, when they come on immediately at the close / open of the new candle, and they have some strength. They typically print as valid signals. Doesn't happen 100% of the time. Nothing does. But that's the risk of waiting for it to close. You mitigate some of your potential profit by waiting, but that's your trade-off. That's what trading is. It's risk versus reward. If you want to be conservative and wait for that candle to close, then you can. You may or may not appreciate much value after that fact. Just kind of depends on what happens. But in terms of how you use these together, so if you consider a weekly signal as an intra-monthly signal, then both of these can be valid at the same time, just as a daily signal, which could be considered an intra-weekly signal, and those could be valid at the same time. And this one is telling me, the A1 algo is telling me that it expected not to pass this high here today. And, at the moment we're seeing that break out, but if you look at the heat map, if you look at fire charts, bulls are certainly trying to make it a tough fight for sure. So the fact that they're holding up into this range is good to see. And the fact that we're seeing all of this buying is good to see. Notably, purple, which is the class that has historically dominated price action and price direction, when we hit that 65.5 yesterday, which was the 50-day moving average, they started selling. They didn't dump everything, but they took some profits.
They started, yeah.
And that's what traders do. Would they do, Mark? They took profits on the way up. That's what they did.
Wait, isn't taking profits how you lose money?
Right. Yes.
Mark, I want to pass it over to you also. Keith, thanks for giving us a little bit of a deeper explainer also of not just what you're seeing, but kind of how you're seeing it, in terms of the actual indicators and things like that. I do appreciate it. If we have time, I want to come back because I do have another question for you. I want to pass it to Mark quickly though. Mark, I don't know if you have something special prepared for us also, or
got a couple of things we can look at. So I think, I'm struggling to, not struggling to, but I'm trying to work out what my, how I can best be of use on this call. Because I think there's very little I can do to contend with the quality of the information that Keith shares with us.
Nonsense.
But Keith also doesn't pay attention to, let's say, the fringes of the cryptocurrency markets. And so,
Mark, if I may, really quickly, I think I find personally a lot of value in you being here because Keith will show us kind of some indicators and things to look at as far as that data, right? Yeah. But then with the product, you actually have to have the proper tools to find that data and to see that, and then to actually put it into like an action, right? This is kind of, you want to be able to trade this. If you're on a centralized exchange, it's one thing. If you're working in DeFi and on decentralized exchanges, it's another. So we talk a lot about orders and fading and things of that sort. This is kind of where I see you come in.
And this is where I see, this is something else I see, because you share the Carbon platform, which you're essentially using as a range trader. And,
Right.
how do you define that range? And
Well, yeah, and so
this to me is a perfect way to define that range.
Yeah,
right
that's
here,
a superb
right
way
there.
to define it. And in fact, yeah, like and this is one of the things we can look at right now. I've already shared my screen. I'm just waiting for. Yeah, here we go. So we can actually let me duplicate my screen here. So I think that one of the things that that Keith was pointing at just there was, I think that we're sort of expecting, like, if there is going to be a move down on Bitcoin, and of course we need a Ethereum native version of it. And I always tell everyone, like, wrap Bitcoin is fine, but just be aware that a lot of the signers on that contract are in jail. And so I think TBTC is the one that you should go with. I've met the people that are responsible for this token, and in terms of its decentralization and security, I really think that there's nothing better. And of course, stable coins come with their own risks. I think USDC is pretty good. And so one of the things, like, to try and represent Keith's perspective, and his bias on the markets, and mine, to be perfectly honest, is that right now I am expecting the market to pull back from here a little bit. And I think that one of the ranges that I was looking at, and I think Keith also pointed to it, was this 55K mark. Keith, can you confirm that for me?
Yeah.
Right. So there are something like a pullback to 55K would not be unusual, I think, is one of the ways that we might be able to express.
Not only would it not be unusual, I would say that that a retest of support to at least 66.5 is required, and I expected us to go to 56.5 would be required, and on that move I expected us to go to 55. So 55 is for sure a reasonable target.
Yeah, so let's try and and express this. Let's not say hopeful, I'm sure everyone just wants the price to go up, but let's say that we are convinced that we're headed a little bit farther down, and we're expecting at least a 60. Oh, sorry, it was a 56,500, I think. So let's say we're expecting at least a return to these kinds of levels. But we've also noticed that there's a pretty decent amount of liquidity stacked in the book at 55K. And so, the bet that we're making, essentially, or one of the bets that you could make, is that from the current price, we're expecting at least an 11% drop, and hopeful to get to a 13.4% drop, right? To be, conservatively bearish.
Right.
Obviously, if you wanted to be more optimistic, we could say that a test farther down is also likely, right? So maybe like a 50K,
sure,
drawdown, a 21% drop from today. But the point is, with the way that this product is structured, is that you don't have to put all of your chips on a certain range. You just need to decide where the extremes are of the expectation that you're trying to determine. So let's say that we're doing the conservative one from 56.5 down to 55, and we could put any amount of money in here. Obviously, this wallet doesn't have any money in it, so it's going to tell me I can't actually do the strategy. But let's say I had 1, 2, 3, 4, 5 USDC that I'm willing to commit to this. The important thing is that anywhere between these two numbers, I'm trading. And I've used words like geometric sequence and geometric mean and things like that in the past. But the point is that a small proportion of this USDC that I have will be buying as the price hits the 56.5. And I will only run out of USDC as the price approaches that 55K level. And that's
so at what market, what increments are you buying? So how are you making sure that for example, that if it starts buying when it dips to 56.5, how are you making sure that you're not out of capital before it gets to 55?
Right, exactly. And so the way that you would understand it from an order book perspective is basically distributing all of this USDC at different levels, right, throughout throughout the entire stack. And that's the way that's still the way I choose to understand the product now.
So are you designating how many, what your order size is, or how many levels you want to distribute? Like, are you saying, okay, I'll take 20 orders?
Exactly. It's just that the number of orders is unfathomably high, right? So we do it. Each order is at the lowest divisible unit of USDC. So we're putting 1 times 10 to the -6 amounts, right? So a fraction of a fraction of a fraction of a cent at each level, all the way down between these two. So you end up something with like 100 billion orders, maybe more than that, between these two price levels. So yeah, and this is something that
Did you say that you're not
good
paying?
Did you say 100 billion orders?
I think it would be more than that. So let me think. So
but you're not paying
USDC
when
is
those
10 to the
orders are
6,
filled.
and you're not paying when any of them are filled, correct? So it would actually be this number. So we're at 12. So it'd be with 6 zeros after it. So it's this many orders, which is what?
A lot.
It's a lot, right? But this is a very, very big number.
Zeros, Keith?
Yeah, so that's the millions. Okay, so it's gonna be something like 12 billion orders, I think, to be conservative. Oh no, yeah, because I might have to add another 6 to that. So yeah, it's hundreds. It's an unfathomably large number each way, right? So each bit that represents the token balance that you are providing is essentially put at a different price point. And so this is why we're able to achieve such good resolution with respect to how the price is moving around.
And so you're spreading your risk too across that range. So it's not like you 100%. Have anything focused on any great risk on any single order.
Exactly, and this is kind of what I was hoping to demonstrate today. Not necessarily looking at Bitcoin, but looking at some of the tokens that Keith doesn't speak about. But we should point out material indicators. As long as there is an order book for it on Binance, you can actually discover it.
Right. We all BTC and USDT pairs on Binance.
Yeah, exactly. And so I'm looking
at. But if it's a token on TradingView, not even on Binance, right? If it's on TradingView, then
no, it has to be on Binance.
For fire charts is just Binance, but for TradingView, for the indicators on TradingView, any asset on Binance, and they work on stocks and commodities and Forex and anything else that you can chart on TradingView.
Yeah.
Right. Okay.
Yeah. So one of the things I thought I would look at is some tokens that some people have been like within the trading groups that I sometimes visit. There are a couple of tokens that have begun spiking people's interest because they've broken out of these sort of descending channels. One is Opium, which is a token from way back. So I think this started in 2021. And there are a lot of tokens that have this kind of profile. Obviously, this is not what you want to see versus the US dollar. But the important thing is that you don't really, as long as you're buying low and selling high, you don't necessarily care where it's come from, but where it's going. And so people are looking at this because one, it's actually on the weekly chart, it's actually managed to break above one of these slower moving averages, and is ended up pinned between these two levels. And you can kind of see that manifesting itself here. And there's a couple of tokens that are doing this. So Opium is one of them. GRT is another one. This is obviously an extremely important project. The graph is one of the most important sources of information that indexes and organizes on-chain data, and a lot of projects are dependent on it. And it had a big sort of wide token distribution, and so since launch it's been sort of trending down. But already since the bottom, which was at 5 cents, it's already sort of made a 6x. Right, so it's already performing quite well, and again has started to break above some of these slower moving averages, which is nice to see. Again, this is a weekly time frame, so these are very slow moving averages. And one of the things that you might question is, well, okay, well, here's a descending channel on Opium, and here's one on GRT. It's very difficult to determine which one of these is outperforming the other just by comparing their graphs both in US dollars. Of course, you can take measurements and things, but the overall profile, the shape, the fine structure that it's generating is difficult to see, because TradingView will not let you see the price of GRT in Opium. Right? There's just there is no chart for that. It's just generally not supported. And so one of the things that
there's no chart for that, because none of the exchanges that are there are supporting that pair. And that's actually an issue with a lot of exchanges, even the newer ones. We're working with my other company. We're working with on some deals with some exchanges to get them to add. They want to partner with us, but they're not on TradingView. It's like you got to get some pairs on TradingView for us to be able to to do anything.
GM guys, GM.
Good morning.
Hey, Corio.
Hey, how are you doing? Just a tip. Actually, there is a way to trick that and be able to see these things on TradingView. I can share later, but actually, okay. Can I interrupt you for a second, Mark?
Sure.
Okay, let me just share the screen, because this is something I've discovered.
Wait, Corio.
Yes.
Corio. Let me, Mark, I'm going to bring you back up. I just want Mark to finish running his simulation.
Yes. Okay, go ahead, please,
Mark, were you going to run a simulation? Because I'm going to pass it over to you in just a minute.
Yeah, okay.
If you don't mind, I want to have Mark kind of
note it down for later.
Okay, awesome. We're mental noting. Mark, may I bring you back up then? Can we run your simulation?
Yes,
I think you were going to run one for us, no? Okay.
Yeah, of course. And so, I mean, the point that I make is that it's very difficult to get access to these, to these kinds of exotic trading pairs, but also, asking the question, how much, what would it mean to fade these? If you're not necessarily more bullish on GRT than you are on Opium or something like that, then trading these one for the other would make sense if they're sort of in a sideways channel, and if that channel is predictable, or it seems to be predictable, then you may be able to trade it relatively well. Now, we said that when you're creating these ranges, you're creating very, very large numbers of discrete orders. And that means that there's only a finite and small amount of liquidity available at each level. But so long as someone's happy to take the liquidity that you're offering up to a certain price point, then there's really no reason to expect that these things won't be filled. And the arbitrage fast lane makes short work of that anyway. But yeah, the point that I wanted to make is that trading both GRT and Opium, like if you are speculating on how this chart is going to evolve into the future, seeing as that they are both at sort of critical, they're starting to break structure and in a positive way and in a bullish way, then it may be worth trading these things versus each other if they're showing similar patterns.
Incidentally, that looked very similar to the Bitcoin structure that I showed you.
Yeah, well, one of the things I was going to simulate on this call as well is what these tokens look like versus Bitcoin. And so we can look at that as well. But yeah, the point that I wanted to make is that if someone was to say, look, I'm always going to buy Opium with I'm always going to sell my my Opium for GRT when it's between this range, and always going to sell Opium for or GRT for Opium when it's in this range, what would that actually mean? Could you realistically, even if you had access to these charts by yourself, do that calculation? Because it's difficult, right? These are recursive calculations, and so if it's not a simple simple calculation. It's something that actually has to take the output of a previous calculation and put that into the input of a new calculation. You have to do that a very large number of times.
So how
which is why
question Mark, in terms of, because if I understand it correctly, you are finding, you're basically executing these trades based on where the liquidity is available. So that's not any single DeFi platform. It could be any number of that you're pulling from. So how and where is the price data coming? that is able to so quickly and seamlessly put these coin pairs together that may not have perhaps nobody ever paired together before.
Yeah, so where it's aggregated data. The back end pulls the information from 3 different data sources. These are the CoinGecko API, the CoinMarketCap API, and also the CryptoCompare API. And so what you can do is basically have a look at which pairs are available for these coins. And this is why CryptoCompare is so great, because you can actually put in, you can find exotic trading pairs relatively easily. CoinGecko has recently started to pull on-chain data. So you can have a look at specific, price charts in specific, in specific stable coins, not necessarily just versus the US dollar, but specifically versus USDT and USDC and so on. And that can actually reveal like arbitrage opportunities and things that may not have been obvious before and that kind of thing. But the short answer is that if we can find a common numeraire between 2 tokens, then it's possible to quote a price in those tokens versus each other. And history shows that this is a perfectly good assumption, because we've been running the protocol now for over a year, and even on these exotic trading pairs, because the arbitrage opportunity is present, then it's very, very easy to match the market up and execute these trades. So the assumptions behind the simulation are provably well founded, which is good news. And I guess, one of the things that I wanted to show is that, trading or fading GRT and Opium versus each other is actually not a bad way to trade. Since they've both started breaking out of that range, they've actually had a hyper volatile profile versus each other. And again, this is one of the things I like to show on this particular chart. And if I actually remove some of these things so that we just have a look at the stuff that we're interested in, this thing actually breaks out of the HODL value very, very quickly. So you can see, and this is the preferred numeraire that I'd like to measure the trading strategies against, which is the buy and hold strategy. So the buy and hold, did outperform our trading strategy back here, and then once again up here. But then very, very quickly, our trading strategy outpaced it. And in fact, it outpaced it to a point where even if you had managed to sell the exact top, or like very, very close to the exact top, this trading strategy now, with the tokens that it has at the end of the simulated period, is already outperforming the, that kind of timing the market that no one actually manages to obtain. So this is, I think, a really good way to use the simulator, not just to get exotic price charts very, very easily, but also to work out how they trade versus each other. So I said that I would also do, let's flip this around so that
we don't have too much time left, Mark. I do have to pass it over to Corio just to give you a heads up here, okay?
Sure. Well, we can do this nice and quickly. You
can run this one.
Yeah, fine. I'll just put in one Bitcoin here. But again, as Keith had rightfully pointed out, the chart that GRT has started to print since, let's call it the beginning of the bull market, is very, very similar to the one that Bitcoin has printed. And you can see that here because they basically begin and end right at the same point. But there's been a lot of really nice volatility in the meantime. And if you were paying attention to, to this capitulation in BTC versus GRT, then you could actually use that, right? If you say, well, I expect the trading to sort of continue within that band. And this is, a year ago, if you had made that call, you actually would have been right most of the time, right? The overwhelming majority of the confluence here is actually respected in that range. And so if we were to simulate that, right, had you made that call, you would be up, something like 74.9% in GRT. And remember, GRT has made a 6x return during that same time period, or at least during the, from the market bottom. So I like to show these things off. I think that this is a very good way to get your sea legs under you without actually having to take any risk. Just if you simulate this enough times, similar to a flight simulator, eventually you'll be able to land the plane on your own. And so, yeah, I think that's the conclusion to my bit, is that, get these exotic pairs, start back testing them, and eventually you'll have enough conviction to create a strategy and stick to it and see how it performs over time.
Awesome. Thank you, Mark. I did put in the comments. I've been putting comments for everything. So you'll see material indicators in there. You'll see all of the guest Twitter handles and things of that sort, and project pages as well. So just want to keep everybody updated. I also want to thank all of the new viewers. I keep seeing, we have like 1,600 viewers right now. I'm so glad that we have so many that are really taking an interest in what you guys all have to say. I've been saying it for a long time. So valuable. Corio, thanks for being so patient. I'm glad that you were able to make it. Mark, thank you for everything that you've shared with us. If anybody has any questions for, any of the guys, please don't hesitate to reach out to them or to myself. Corio, I've seen some of your tweets over the last week, since we last visited. Some interesting things with Friend.Tech and some narratives that are going on at the moment. What do you have in store for us today?
Sure. Let me share the screen. And by the way, this was very interesting what you shared, Mark. I will look at this later, because this exotic pair trading is very interesting, and the volatility and trading the ranges. So kudos to you to develop these things. Now, because we have limited time, I will try to go faster. In terms of narratives, as we said, last month was not a good month. This month, we are seeing, so just to summarize the situation right now, from the start of the year, we had a very bullish Q1, but then April was so bearish that kind of all the narrative-based tokens reversed all the profits that they had. And so now we are almost at break-even level for many of these narrative tokens, more than 200. May so far hasn't been that bad. At least most of the narratives are not seeing a strong price action. AI is seeing a good price action here. And if we look at AI narrative, Ocean, etc., we can see RNDR is having a good run, as well as ENQ, AI, AGX, etc. I have a dedicated dashboard for AI, which you can find here. I have been doing a number of interviews with AI projects that you can also find there. But you can find also here some of these AI tokens. So some of them, these are meme tokens. They have AI in the name, and this is yet another, kind of a category of AI coins. Some of them are meme coins, some of them are not, like AI tech, etc. But in general, AI has been performing pretty well. Now it's interesting, the game of rotation that we've seen, Friend.Tech, you've probably followed, and there was a lot of like talks about the version 2. There was it was one of the best performing ones last month before the airdrop comes. Now was kind of now a bit of a chaos with the launch of Friend v2 and the airdrop, and a lot of movements and volatility on the Friend token, but a lot of people have now withdrawn their money, as it seems. I have here, as you can see here, is the performance of top keys on Friend.Tech. I think a dedicated dashboard for that, so you can see
that
here.
Happened fast too, didn't it, Corio?
Sorry,
I said that happened fast, didn't it?
Yeah,
when I
that
saw
happened
news
very
of like
fast
all of a
because
sudden everything was going to Friend.Tech, I thought of our call last week when you were talking about Farcaster. I was curious if you had, and I was on mobile at the time, and I forgot to look, but I was curious, like, what was going on there. I wanted to check out your dashboard, but go ahead. I didn't mean to interrupt you. I
yeah,
thought of
so
you when I saw this news.
So I think what happened is that a lot of people were deceived by the team, and the way the airdrop was handled was not really professional. There wasn't really a clear announcement.
Go figure.
The the official team was kind of like making jokes on where when everybody was expecting them for some official news, and then the website was down and people couldn't claim, and then everybody was selling the tokens. And so you can see here the selling volume that we've seen biggest since the launch, and then you can also see the withdrawals. Look at the daily flows. Like this is right after the airdrop, like a few days ago. Like this is like what? This is like almost 400 Ethereum being withdrawn in one day. Oh, sorry, actually I was on the wrong day. So this is more than 34,000 Ethereum. And so you can see that I think there isn't much left now in terms of TVL on Frentech. This also shows the importance of handling the airdrop properly, which we are seeing. If you follow DeFi, the airdrop meta, Eigenlayer, Renzo, Starknet, all of these things had some kind of catastrophic airdrops, and they had to, some of them, come back to some of the decisions that they took, and then the most obvious example is Starknet, which has almost 0 users now post airdrop. So there are some lessons there for protocols to handle these things properly.
And there's also some lessons for some traders.
Absolutely. To there is a lot of volatility during this time. So for people who love volatility, there's always opportunities. Other than the AI narrative, which is performing very well, we don't yet see any kind of strong outperformance. Most of narratives, are in this range within -2, +2, +5. As you can see, the median is -2% in the last 7 days. And yes, so now coming back to DeFi, to Bitcoin, let me just address, give maybe something related to what Mark said. These exotic pairs, I think this is something that people might not know, but one of the ways you can actually see the relative performance of different assets is by using the division on TradingView. For example, let's say that you want to see the performance of Solana compared to Ethereum. There is not a lot of Sol ETH, maybe there is, but now let's say that you want to do with XRP. I don't know, be true, but anyways, if you go with more exotic tones like assets, you will not be able to do that. So for example, Ton is a Telegram blockchain, Sol is Solana. The way you can do that is Sol USDT divided by Ton USDT. And now, because there is a common denominator, which is USDT, this will give you the performance of Solana against Ton, which is very interesting. Now, to double check that, we can do ETH BTC, which is a very common pair. Now, if we do that, so you can see the shape of this thing, and now we will do the same setup. It is ETH USDT divided by BTC USDT, and we get the same thing. Although it's not the same pair, but because USDT is the common thing, and then by the division it goes away, we are actually seeing ETH USDT. So by the same principle, you can do any kind of exotic pairs. So for example, Mark mentioned GRT, if I remember. So GRT, what was it? Opium?
Opium.
I don't know Opium. It's the first time I hear about Opium, but maybe it's one of these ones, but let's try. So there is this wick, but if we zoom and if we go on the 4-hour chart, then I'm not sure that's exactly the token, but anyways, if we zoom in, we had some kind of range. So anyway, that was a tip on TradingView, that how you can see different pairs and how they compare to each other.
That's a cool way to be able to chart and just like go through and chart a bunch of random pairs. But the cool thing about what Mark is showing on Carbon is you can actually trade it from there.
Yeah, absolutely. It's not to say that, what Mark was saying is just it's so much more elaborated, because you can automate the strategies and you can trade them, etc. And so it's another level. Here it was just to mention that you can at least see some of these things on TradingView. There are different things that you can do on there are like addition, subtraction, etc. So now let's come back to my analysis on Bitcoin. We have just a few minutes left. So price action has been kind of bearish, as we know, in the last weeks. Some people are talking about a bullish reversal. As we are seeing, we went down all the way to 57K, which I remember we were discussing with Keith. We said that this could be a good level, to reach, and then we saw a reversal from here, 56K. So with that being said, it seems that the Bitcoin ETFs are kind of slowly, the selling pressure is going away from Grayscale. I've seen apparently there is, if you look at ETFs, here there is a good dashboard from Hilobi. You can see the the inflows and outflows, and apparently Grayscale is starting to buy for the first time. Apparently they bought in the recent days. So this is something that has influenced a lot the bullish price action that we saw in Q1. All these immense inflows of money on different BlackRock and different players. Although Grayscale was selling most of the time, as we can see here, now this selling pressure from Grayscale is decreasing because they are now maybe running away.
Grayscale actually sold every single day for over 80 days straight, and
Absolutely.
The significance of this move is that for the first time ever, they bought, and the market, that news came down Friday afternoon, and we were talking about that at the beginning of the call before you joined. Coming off of a less hawkish than expected Fed on Wednesday, and then the spike in unemployment on Friday morning numbers. Market already liked that, and then to have this boost from Grayscale actually starting to buy, I think that's really what set things in motion for the weekend. That really kicked off the rally.
Absolutely. I really what I like about this dashboard is that, look, you can see from the start, like initially there was just Grayscale because there was the first who bought all these Bitcoins, and they started to sell, and then others started to gain market share. But now if you look at the current status, you would see that Fidelity now has almost, not Fidelity, BlackRock has almost the same amount of Bitcoin, almost, not yet there, but the trend is there. So it's going to be interesting, I think, to follow that, because if this selling pressure has been absorbed very well, and with all this selling pressure, still Bitcoin went up in Q1, and so this is, I think, bullish to me, because now Grayscale has less Bitcoins to sell and has started to buy, and so it's going to be interesting to see how things develop. I think, Keith, you're developing that more than me, but there is the Hong Kong ETF as well.
Yeah, I was just going to ask, do you have the Hong Kong market on there as well?
No, not yet. As far as I can tell, there is currently no Hong Kong, but maybe this is under development, because it takes some time until the wallets are revealed and people.
And this morning I read news that Korea was approved. And I think in the past couple, I don't know, 1 or 2 shows ago, we talked about Dubai also kicking it around, an ETF. Mark, you were just there. Was there discussion of that?
Yeah, there was. You should just expect it's going to happen. The Emirates are extremely liberal when it comes to cryptocurrency and blockchain technologies in general, and then the royalty is trying to position themselves as being sort of a tech lead, and they see an advantage where I think the US is trying to stifle this kind of stuff. They would like to flip that, and I think they've been relatively transparent about that objective. But you should absolutely expect not just things like ETFs, but also things like CBDCs and other tokenized securities and things like that.
And what's the vibe you're getting around? Like, you're traveling around the world. Are you getting? Is anybody talking about CBDCs? And what's the vibe? Because the pushback is really, really strong here in the US. I could tell you that.
Yeah. I think. It depends on who you talk to. I would say that there are sort of the crypto purists that sort of see CBDCs as like an uninvited guest. people that are showing up at a party that they don't belong at. But then I would say that there are sort of, you know what I mean, right? Like that's kind of the reaction, and I think it's a little bit.
What happens to stable coins if
They could
sovereign governments convert fiat to if there's a digital dollar?
Yeah, they could. I think they could potentially coexist, and I think I'm not an expert on the topic on stablecoins or CBDCs, but I can tell you that some of the conversations that I've been in, there are hopeful voices that are actually more welcoming of CBDCs than you would expect, and these are people that have been around since the very beginning of blockchain. In general, I think the view is that it might not necessarily be a bad thing to be able to perform interest rate arbitrage between nations, right? And so this is something that's already done on Forex, right? Where people will quite happily take exposure to, for example, the lira, if the interest rate is high enough. And being able to do that quickly with a blockchain rather than having to take rather than having to do the Nostro Vostro accounts or something over the Forex desk is attractive. And this is the only way that you can realistically do that is with CBDCs. And so, yeah, I do expect that they will show up whether we like it or not. But I don't think it's going to be a disruption, and I don't think that it's a threat to Circle's or Tether's effective monopoly on stablecoin issuance, because these are, they are still, in a way, just wrappers of cash equivalents, right? So that where CBDCs are going to differ from things like Tether and Circle is that Tether and Circle still issue them like as cash, but remember, they're not backed by cash. They're backed by things like corporate papers and and other types of corporate debt. And in a way, those things have always been traded like a stable coin anyway. This is just a tokenization of that kind of thing. So
CBDCs would likely be, at least in the US, would likely be FDIC insured. That's kind of a big deal.
Exactly. And there will be, it means that this, the stable coins issued by Tether and Circle are likely to service a completely different function, right? Which is, how to make liquid, some of these things that have sort of a liquid or supposed to be liquid off chain, and just bring those on chain. Like I don't see it as being an issue. It will be it will be competitive. I think that people will likely prefer CBDCs and because of the insurance and things that they have. But remember, the CBDCs will also come with a huge amount of like security overhead. And I mean that in like both a good and a bad way. But don't expect, for example, that you're going to be able to transact in a CBDC without completing an enormous amount of KYC and things like that. Whereas things like Tether will likely probably either allow minimalist KYC or continue to operate without KYC and things like that. So it's a horses for courses thing. I think that they will continue to service their own separate demographics, and I don't see either one as being a threat to the other. I think that they will coexist and people will be happy to have them.
I want to continue this conversation. We are at the top of the hour, though, and I do want to bring it back to Corio. I know that he's got his BTC analysis up there, so maybe next week we can continue speaking about the CBDCs and stablecoins. Corio.
Yeah, absolutely. Let me just quickly finalize just one last view. It's interesting that if we are in the daily or 3-day chart, we can see if we draw Fibonacci levels, we can see if since last year, actually January 2023, where we started to have this leg up, we can see that every time, at least with how I have drawn these Fibonacci levels, we had a pullback on the 382 level, and then either continuation, either some ranging or continuation higher. It happened here, just almost just below that, and then higher again here. We had this bullish reversal and then continuation higher. It seems that again we are just very similar to this environment, and so far we haven't had a dip in the last 2 years, at least on the Fibonacci's much lower than the 382. So it's interesting to see the similarities between these Fibonacci levels that is holding here. just a fake out here. And so let's see if this repeats again. As we've seen here, we might have some consolidation in this range, and this is expected because you remember last week we said during just after the halving period, there are usually a month or weeks that things are calmer, and we don't see really a lot of volatility in the market. And also, this is also usually a sign that something that happens in the summer and in the month in May, which is mostly bearish. So if I had to make some predictions, I would say we would see something like this in the upcoming month. Maybe a bit higher or lower, but at least that kind of pattern has been seen in the past before we can get some kind of moves like this. But at least it seems that this is holding so far, and we are, I would say, not going much lower than these levels, or at least this week.
Right.
What level is that at right there?
Sorry,
Keith. What level?
Yeah, I would say we are
bit.
likely
Where are
to
you
hold
at?
this level. If I had to take a guess of this, 28K, maybe some weeks as we've seen here, or here. Just usually these kind of patterns happen just before the reversal. We get the last week. It happened again here. It happened here, and so maybe we will get something like this, just a small week, and then move higher. But I would think on the weekly time frame we will hold this level, in my opinion, of between this range. So if I had to draw a support,
you weren't here earlier. Yeah, you weren't here earlier, and Keith was pretty much saying, I'm seeing this consolidation. We've been talking about how we kind of need this, right? Or
right.
how it would be healthy.
Right, for sure. And I want to see a more defined consolidation range, which we're not really getting. We've been in a really wide range since early March.
Yeah.
And maybe it's the fact that we have this ETF demand and the sentiment that comes with that. Maybe what keeps the range wide, right? It may be what keeps pumping things up. But I agree that there needs to be consolidation. I agree that, we went to 56 and change, 56.5, I think, and I really expected to see 55 at least. And so I won't be the least bit surprised if we at least retest that. We're seeing some bid liquidity move up in the order book from the 50K range up to, we saw some this morning come up to 58K. And then just a few minutes ago, some come up into 62. So that may help elevate the range, but we just have not defined that consolidated, a really well-defined consolidation range. And that's what I'd really like to see, to have some confidence that it's time.
Yeah, absolutely. I like when I have the same ideas as Keith, it reinforces my biases. I agree with Keith. I think this range would make sense here. Maybe some kind of, resistance, or these kind of wicks that we are seeing. Usually, these are like
looks like a carbon DeFi strategy to me.
Absolutely, this is maybe the best time to use actually carbon.
You've been staring at that so long that probably everything Mark looks at a sandwich and he sees the top piece of bread and the bottom piece of bread and goes, "This looks like a carbon DeFi sandwich to me."
That's hilarious. Thank you guys so much for joining. And you know what? I'm actually curious. Maybe we have a dedicated call to kind of speak about stable coins and CBDCs and things of that sort. We could do it on the trading call, or we could do it on a dedicated. So we'll take it offline and see what we think is best, and we'll let all of the viewers know and put an announcement out and schedule something either way.
That's a cool topic. That's a cool topic for discussion.
Well, try to find someone who knows a lot about it, because I think the CBDC thing is like, there's it's a very deep, complicated, topic, and they're not all the same, and they don't mean the same thing in every jurisdiction. But yeah, let's if anyone's listening to this and they consider themselves somewhat well read on the topic, I think that we would be very glad to drop a comment. We may, I don't want to speak for Jen, but it might even be nice to have you on the call if you know what you're talking about.
Or at least you sound like you know what you're talking about.
Even better.
You're convincing enough. We don't know. We can't call you out. Funny, Keith. Well, thank you guys again so much for joining me. Thank you to all of the viewers and the listeners. I dropped all of the links and things that we were discussing and kind of walking through in the comments. You can see my Twitter handle there. It's at Here to DeFi. If anyone has any questions, you can reach out to me there. Or if there's a topic, something that you would like to see us discuss, including the CBDCs or someone who would, be qualified to join us, would love to have you here. Thank you, Corio. Thank you, Keith. Thank you, Mark. And thank you to all of our viewers.
Thanks for
see you
having
guys
me.
next Tuesday, 4 p.m. UTC.
Awesome. Thanks, Jen. Great job as always.
Absolutely.
Thank you.
Thanks, Jen. Thanks, guys.
Thanks,
Bye-bye.
guys. We'll talk to you soon.
All right. Bye-bye.